Another this week's edition of Selfwealth Live, the technical analysis edition. We welcome everyone on the other side of the line. Once again, thank you for coming along, and of course, thank you to my right-hand man, Jason, to my left. Jason, how are you today?
Hey, Rog, I'm good. Looking forward to another show. Bit of movement to discuss today. Well, there always is something to discuss. Markets are always keep us interested and, keep us busy.
Yeah, there is a bit of movement, and I think it's very similar to the weather here in Victoria or Melbourne, where it's like 10 degrees. And then, if you're ever wondering what hosts are wearing, what underneath the screen here, I noticed Jason had a bit of a walk away. Then he's wearing shorts, and I'm freezing cold and 10 degrees. What's the weather like up there in Sydney, Jace?
A sunny 28 today. I was watching the Melbourne Cup coverage through the week, and it's looked a bit on the ordinary side, Rog.
It's. I wish I was up there wearing shorts with you in Sydney, Jace. That's for sure. Hopefully, everyone else is having some good weather wherever you're staying at. The line, please drop us a line anytime. Just one thing to note before we get on to the disclaimer. Sometimes, if we're a little bit late, I've been told that we don't get your chats. If you put on a chat before we go live, I might not be able to see them. So just repeat it in the chat if you put in something before we actually went live. But I can see there's things that have come in just before 12 o'clock. I've been told sometimes we miss chats, but that's okay. We try and do our best with everything we can. All right. So before I go on with the rest of the show, Jace, did you want to just pop up the disclaimer?
Yeah, quick disclaimer for everyone. So, of course, everything we do is general commentary only, no personal advice on this show. And I just quickly put up that disclaimer that we have a look at each week. I'm not part of the Selfwealth Scythe team. My business is Motion Trader. My details are at the top with general commentary, licensing, all of that. Beneath there, we've got the Selfwealth disclaimer, licensing, general commentary, again, all in there.
Fantastic. Thanks, Jace. So if you're a newbie here, I'll just quickly go how we run the show. Obviously, we're going to go through the major markets that are offered at Selfwealth by Scythe. That is the Australian market, the US market, and the Hong Kong markets. I've got a great general question from a viewer, Jace, which we'll go through today, and I'm sure you're going to be able to answer that quite well. And then we're going to go through your tickers. As I already see, there's some coming through. Just remember, there's one ticker. We're going to try and go through one ticker each. If there's time, we might be able to circle back. But once I draw that line in the comments, there's no more. We won't go any further than the line in the comment there when I draw that line, obviously. So otherwise, I think we're ready to get cracking for another good show. Let's start off with that Aussie market. Jace, how's it looking?
Okay, so let's get our ASX 200 chart up. And so here we go. Here. Now, ASX 200, been under a bit of pressure over the last week, and it's been testing this 100-day moving average. And I've got the 50-day and the 100-day moving average, as I typically have. And so testing this 100-day moving average, this is the first time we've been at the 100-day since prices broke above the 100-day back in April. So it's been a long and steady run above the 100-day average. Last week, we were discussing the possibility of a move back to the September low. So this is down here, the September low. And we're looking at that as maybe being part of a big sideways consolidation below the August high. And so far that's been playing out. We've got this real sideways movement to the price action since that August high. There's already been signs of the dip being bought. Just zooming out a bit so we can have a look at this a bit better. There've been a couple of attempts. So like back on Wednesday last week, prices got down near that September low. Then there was a quick rally. And then a couple of days later on Friday, prices tested even a touch lower, but then closed back sort of mid-range. And then on Monday had a good bounce. So there are some signs that buying of the dip is going on. That's encouraging, but it's going to take more than a 1 or 2 day bounce before we could say the consolidation is over. We now need to see follow-through buying that gets prices back above the 50-day moving average. And that would then really start to say, look, we could then say, look, buying of the dip is going on, push prices back above the averages. That would all be positive. I think a bullish scenario would be for a rally from current levels, like maybe back above those 50-day averages or average, and then maybe some sideways consolidation for near term, maybe a week or two. So maybe get some sideways consolidation, and from there that could set up a platform for a break to higher levels in December. Like we could get some sort of price action like that. Like we never know what we're going to get, but that's a sort of price action that does sometimes form within these ranges. You get the trading range forms, and you get the rally to the top, consolidation just beneath the highs, and then a breakout. So looking for that type of price action, that would be bullish action. And I think a key factor in maintaining a near-term bullish outlook is for prices to hold above. Well, firstly, we've got these lows from last week, but then we've got this level here around 8,600. You can see that blue horizontal line heading across, and that marks a previous all-time high from February, as well as a secondary high from June, a retest in July when prices broke up, came back. So this is a good level to keep an eye on, I think, over the next few weeks. If prices were to flip from above that support at around 8,600 to beneath the support, well, that'd be a problem. I think it'd be a real warning sign, and it would basically weaken the overall structure, and it would be a sign that the dip hasn't been bought, or the buying wasn't sustained. So that's not what we want to see. We don't see price action happening below the this support at 8,600, which would also take prices below the moving averages. The other concern would be to have prices make their way below support. So if we were to get prices break lower, get below support, and then start to consolidate below the moving averages, and below this support line, that would be that would then potentially set the market up for lower levels. But of course, that hasn't happened, and hopefully what I've just sketched in there doesn't happen. But I think it's important just to know where the key risk points are. So I think this is a bullish structure at this point, but doesn't mean we want to be blindly looking one way. We want to look on the other side as well and go, what could go wrong? And that's what we want to look for something going wrong. It's like prices breaking below support and then getting stuck below the moving averages. That would be a vulnerable setup. But as I say, that hasn't happened at this point. Until I've got cause to do otherwise, I'm approaching this as a consolidation within an ongoing bullish trend. I think it's a case of remaining optimistic and continuing to take risk, but as always, accepting the situation can change, as I've outlined, one of those scenarios, and then using stop losses to manage risk accordingly.
Yeah, it'd be interesting to see if it continues to get range bound or consolidate, or let's hope it doesn't go to the south, as you say. Now, is it slightly different to that US market structure, Jace? I feel like it's a bit more bullish over that side.
Yeah, well, we spoke about the potential for a pullback last week when we were looking at the S&P 500, and that's what we got towards the back end of last week. So both the S&P 500 and the Nasdaq had pretty much run ahead of the broader market, particularly with this break to a series of all-time highs towards the end of October. The broader market didn't do that, and I think what this pullback to the 50-day moving average does, it just helps keep things a little more balanced. What would be a concern or maybe a bit of a warning would be if the Magnificent Seven, as they're called, those top seven stocks led by NVIDIA, if you saw those surging while the rest of the market was flat or pulling back, that would be, sometimes we get that near market tops where there's no breadth to the rally. It's really just driven by a few big stocks. This rally the whole way up has largely been built on broad participation, and I think that's important going forward. We need to see that broad participation. Having a quick look at the equal weight. the S&P 500 on an equal weight basis. And this was our clue last week, where we had the S&P 500 making all-time highs, but the equal weight was stuck in a range. It was stuck below its previous highs and stuck in a two-month trading range. Unlike the S&P 500 that was hitting those all-time highs, it's been 2 months sideways for the equal weight. Last week's price action brings the equal weight back to brings it back to the 100-day moving average. I've got the 50 and the 100-day averages here, so the pullback's back to the lower end of the range, and that coincides with the 100-day moving average. And this is where buying of the dip would often be present. And so far, the signs are good, because you can see just over the last couple of days, prices have started to lift off that 100-day moving average. We need to see follow-through buying now, and we need to see prices comfortably back above the 50-day moving average, just like I was discussing with the ASX 200. The equal weight in the ASX 200 structure are reasonably similar, actually. We've got the where's August? Yeah, that's where the ASX 200 peaked in August, and it's moved sideways, and we've got this sideways movement in the equal weight over that same period. So yeah, the key now is to see that follow through buying, get prices back up towards the upper end of the range, and but so far this is it's a positive start. Just briefly back on the S&P 500, prices have probably done the minimum. They've probably done a minimum for a complete consolidation. If we look at what's happened over the last few months, like just look at all these consolidations we've had so far. They're typically they're brief, and they've been followed by quick returns to new all-time highs. So just recently we just saw the same thing. Brief pullback followed by new all-time highs. So we've had another brief pullback. Will it be followed by a quick return to new all-time highs? Well, of course we don't know. From the perspective of what we've seen in recent months, that's certainly a possibility, and that's why I say it's done the minimum. But look, we could also see prices just track sideways along the moving averages, just because all the previous consolidations have been short and quickly rebounded. Doesn't mean this one has to. It could move sideways for a couple of weeks or whatever it may do along the moving averages. I think that the key is broader participation returning, and that would be a breakout in that would be seeing this equal weight start to break to new highs. I think that's the key for the next sustainable move in the S&P 500. Either way, this remains a bullish structure, and I think the odds favour all-time highs in the weeks ahead. I'm still long the S&P 500. I plan to stay that way until the structure gives me reason to do otherwise. But when you've got rising moving averages, price above moving averages, I think you need to say, well, the odds favour the path of least resistance being to the upside.
Yeah, as usual, and as we talk to that a lot. I think let's have a look at the Hong Kong and the Hong Kong Chinese markets then.
Yeah, so over here in the Hang Seng, first, after about 4 weeks of trading around the moving averages, prices are now looking like they're trying to rally off the moving averages. So again, the 50 and the 100-day averages. Prices hit a 1-month high yesterday. You can just see that in the Hang Seng. They hit that 1-month high. It'll be interesting to see if the rally can gain momentum from here during the week and start to move back towards the October peak. The key markers here are bullish, and those markers are, we've got the rising moving averages and price being above the averages. I think the sensitivity remains to the upside. And quickly having a look at China, and same applies here. Prices have been stabilising. It's been stabilising above the 50-day moving average, and that follows that quick pullback we saw in early November. So, and that was a couple of weeks ago. So, encouraging to see that stability start to come in. I think that's positive, and it repeats the trend we've been seeing. in recent months where we get these dips, but then they're quickly bought. Short dip and then quickly bought. And you can just go all the way back through this chart and you see that that's been the trend. Not dissimilar to the S&P 500 in that respect. We're short dip and then quickly bought. So far we're seeing that play out here. What is interesting is much of the news flow around China, I think it still remains broadly downbeat, but the market is suggesting something else. We've had this emerging trend for several months, despite the news flow not really supporting that, and that's not unusual. The stock markets generally often start recovering before the reasons become obvious. So what the drivers of the Chinese market are, well, I don't know, but we can see in the price action that it's been a case of buyers pushing this market higher. It's been interest in buying the dip, not selling the rallies, and that's what makes a bullish market. We could get some more consolidation in the near term, of course, but like the Hang Seng, I think the sensitivity remains to the upside.
All right, it's good to hear. Okay, well, let's get on to our general viewer question, because I think it's a great one. And it's a bit of a general one, Jace, so hopefully I don't throw you too much of a curveball here. But how has your trading approach changed over the years? And what's the last biggest change you've made to that approach, to your approach?
It depends over how many years we're talking. If we go back to when I began, it's like everyone, I began with no idea. And my focus was on upside, and it was on high risk speculative stocks. It was all or nothing bets. We're going back now to when I'm my late teens. And that continued into probably till I was about 20. I just didn't know. It was all about, okay, could this stock double? I'm not thinking about risk. There's no stop loss. There's no risk management. It's punter 101. It's like that's how I began. I think a lot of people start that way, and a lot of people finish that way because they end up getting wiped out. I started to learn when I got my graduate job at an investment bank out of uni, because then I started being exposed to the right people with the right ideas, and reading books like the Market Wizard book. That was pivotal in me learning. But still, it's a long process. And during the 1990s, I was I probably describe myself as a somewhat of a contrarian trader. So I'd be looking for turning points. I did have trend following tendencies. So when I was making money, I would let profits run. But then I also had a tendency to look for tops and try and pick lows. And I don't do that anymore. So a big shift was moving away from that, because that just didn't work. I missed too many good trades because I was looking for tops instead of jumping on what had been working. So it's probably that change started to shift away from looking for tops, maybe by the time I'm 30. In more recent years, I don't think I've made a great deal of changes to my approach. I've been systematic, rules based, and in my 20s, I wasn't strict rules based. It was general rules based. Let profits run, know what your risk is, manage your risk. But it was a lot more discretion. It wasn't fully on systematic. So a big shift came probably maybe in my late 30s. I really started to move towards highly systematic and algorithmic. Algorithmic is just great because it just applies rules for you, and you can cover a whole lot more stock. So there's been this evolution of my approach over time. But look, some of the basics I've always had right in letting winners run. Going back to my teens, I've never been a profit taker. It's really been let something run, but then building the support rules around it has taken time, around risk management, about having trailing stops and giving stocks room to move, and spreading risk. These are all the add-ons which have come in the last 10 years. I don't think I've really probably evolved too much at all. It's just I'm always working on the psychology of it all. pullbacks are never a joy for anyone. I've had emails from people the last couple of weeks who've been struggling with the latest pullback in the ASX 200, and particularly people who've really jumped on the smaller, maybe to mid cap mining stocks. So they've had a great run, but a lot of them have come back quickly, and people struggling with that. And so I still don't find joy in the pullbacks, but I deal with them a lot better now. It's not that I dealt with them poorly before, but they might get more on top of me, maybe more of a weight on me in earlier times. Now it's like I look at it and it still doesn't make me feel good, but I'm more inclined to say, oh, whatever, because it's like I've got the plan in place. The market's going to do what it's going to do. I'm not going to try and second guess it. So, it's. I know we get pullbacks. I know the pullbacks ultimately stabilise at some point, whether it be in weeks, months, or 18 months, or whatever it may be, and then markets ultimately do resume their upward run. And if you keep following a process, then over time, your equity can then hit new highs. So I know how it all works. So I probably get less flustered maybe than I once might have been with a big pullback. But yeah, always working on that psychology of being able to deal with those things. And because the important thing is, it's great to have rules and a process, but you've got to be able to come out the other side from a big drawdown. And they're inevitable. We're going to get those periods where we do have maybe a 20 or even a 30% drawdown in our capital, because that's what the markets do. The markets will throw in these big bearish phases from time to time. So it's being able to stick with it, see it through. I think that's critical.
That's fantastic. If you could just encapsulate that last 5 minutes of you talking there and just listen to that over again, I think it's over my journey with you for the last 2 years, it solidifies a lot of the stuff that I've learned as well, right? One question off the back of that, and I think we all get, maybe you don't get sucked into this anymore, but when you get bored of this, because you've been doing this for a long time, this system, right? And it's been going for a long time. How do you cure the boredom of it? Because sometimes you get bored and you're looking, is there other ways, or is there better things, or is there more different ways to make money in the markets? Do you ever think that yourself, or are you pretty happy doing this for the rest of your life?
No, I don't get bored with it at all. And look, it's not meant to be exciting. And this is a problem I think a lot of people have. They crave the activity and they reach for the excitement. But the stock market, it's the wrong place. Don't try and play that out in the stock market. It's because you set yourself up for failure. It should be monotonous in a sense. Like I always find it interesting. Like I'm always looking at the charts and I'm thinking like, how does that structure work? So it's mentally stimulating from that perspective. But in terms of doing stuff, it should be fairly monotonous. It's like, okay, I got a breakout, so I'm going to buy that, and there's a stop loss, and it's a fair way off. So chances are there's probably not going to be much to do with this stock now for some time. But you get other people, they'll get a breakout and they're watching it through the day, and now look, it's jumped 5% in a couple of days. Quick, let's take profit. Let's look for something else. And activity for the sake of activity just tends to lead to trouble. It's and I know this from personal experience. Chasing marginal trades when I was at the bank. Oh, look, at the bank there was sort of an expectation that you'd try and make something happen. You couldn't sit there for a couple of months and do nothing, saying, look, I'm just waiting. The markets aren't right now. You kind of had to do something. So that puts a pressure on marginal trades. And I think our biggest advantage as private traders or investors is that we don't have to do anything. And if there's nothing to do, don't do anything. And if you like the excitement of the excitement of the win and all that sort of stuff, it's like, well, look, go out to the track for the day and take $100 or whatever it may be, and just have some fun with it. Or go down to the casino and have some fun at the roulette table. But that's fun, and that's that. You're not going to make a fortune doing either of that. Mostly, no one's going to do that. But sure, that can be fun, that can be exciting, but don't then transfer that to the trading screens. Because then, if you just make it another arm of the gambler's wheel, it doesn't work. You can't be systematic and rules based when you're craving excitement, because the rules can make it slow and steady, which is the opposite to excitement. So do the exciting things elsewhere. If the stock market gets boring, fine. You're here to make money, not to get excited. do other things to get excited. And also the other downside of chasing like the highs of big wins in the stock market, it's it's like if you chase the highs, you're going to be more emotionally beat up at the lows. It's like being a passionate footy follower where you've got your team and they win the grand final. You're on your cloud nine. They lose, and you see people in tears. They really they get swept up in the emotion. They get the highs and they get the lows. I don't think you want your investment portfolio to bring on that same emotion, because that just makes it so much harder to manage when things get tough. Go through an 18-month bear market. If you're someone who high fives every time you make a profit, it's like an 18-month bear market, just mentally destroying. So you want to try and keep it unemotional, moderate your emotions around the stock market, around your portfolio. It's hard to be flatline, but try and just reduce the wave size. Keep your peaks and your troughs a little bit more compressed, and I think that also helps us see off the tough times and have decades in the market, rather than shooting stars who have a boom period, then it all just gets too emotional when things go bad.
Yeah, I think you're absolutely right. Being neutral for me has helped me a lot. I mean, I've got some great winners in my portfolio at the moment, but I'm very neutral about it. I know it can all turn south, and I've got the other ones that aren't so good. So being very neutral. That's good, Jace. Thanks for that insight, and you've given me an idea for my next show and service. It'll probably be called The Boring, Not Very Fun Investor. So thanks for that, Jace. All right, let's get cracking with some tickers. We will start. Actually, we'll start with, because I'm interested. Let's start with gold and silver. I'm sure that's on everyone's mind. If that's okay, just briefly over gold and silver. Let's start to make people happy again. Let's have a look.
Okay. Let me find gold. So I talk about gold a lot in my weekly strategy sessions. So that's the place to come on Fridays if you want to know a lot about gold. So I spent a lot of time talking about it. What I was talking about last week was the potential for a rebound off these moving averages as part of a larger trading range. Look, I don't. My feeling is gold's not about to re-accelerate to new highs. It could happen, and I'm positioned for it to happen. I've got gold exposure, and if it surprises me on the upside, that's great. But I think there's from when we go back and we look at past times, and this is what I did on Friday, we look at past examples where prices become extended above the moving averages. It often leads to a longer consolidation. So look, here's an example just from April. Prices got stretched above the averages. They had an initial pullback, stabilized, and then there was a rebound. And then following that rebound, prices then went into a multi-month sideways trading band. So now we've had the initial pullback. This is the rebound I was talking about on Friday. How much will it extend? I don't know, but there is the potential for a bit more of a rebound. But then I wonder if prices do get a bit higher, do they then find their way into a sideways pattern for several months? I think that's a strong possibility with gold. I think there's a great medium to longer term bullish story. But I don't think we should expect what's been happening from August last year, or what's been happening over the last 12 months. I don't think we should just keep extrapolating that forward and just thinking, okay, every year we're just going up 50% or whatever. Big moves often lead to big consolidations. My feel is the big trending phase is over for now, and we're into the consolidation. But look, as I say, it could be wrong, could accelerate again. It's just like the last time that happened, it was a 1970s style thing, and I don't know. I'm not quite sure we're quite up to that at the moment. And also, it's interesting. Just the I was telling strategy session members on Friday. I was watching the 7:30 on ABC last week, and they had a segment on gold, and they had video footage of people queued up in Sydney in the city at this gold bullion dealer to buy physical gold, And I'd heard about this, but I hadn't seen the pictures. And they literally had a queue going down the street to get in to the building where they're selling the bullion. And that's like, that's not normally what you'd see at the, in the early stages of a gold bull market. It's what you'd often see when there's at least some sort of interim peak is near and a lengthier consolidation is coming. Silver's going to probably be pretty correlated to gold. We're getting that bounce off the 50-day moving average. I think there's that same potential for a longer consolidation. The overall trends are all up. So it's not about trying to pick a top, but it's about just understanding your portfolio. Like I've got longer term core holdings, which I'm fine. I'm just holding, and I've got some a couple of tactical positions where I just bought as prices were breaking higher earlier this year. I can't remember exactly when, but bought as prices were breaking higher, and I've just closed them out. Closed one out as prices initially fell, and I closed one out this morning as prices have rebound. So I've just taken a little bit of risk off, but maintain a core gold holding, going well into the future.
Okay, fantastic. Let's have a look at HSAI, please. On the NASDAQ.
Right, so there's all our data. It's only a relatively new listing. It's I think if I was holding this one, particularly from lower levels, I'd continue holding with like a wide trailing stop is designed to be able to sit through reasonably large pullbacks. And stocks in uptrends can have these excursions below the 100-day moving average, stabilize, consolidate for whatever period of time, and then resume the trend. So if I was in from lower levels, I'd be inclined to be hanging on to this stock for now. I'd also be thinking, okay, where is my exit point? Where do I say, look, enough is enough? And like it could be somewhere down around just maybe below $20. Got this rebound off the low, but really needs to be able to hold its footing around current levels, I think, and get itself back above the moving averages. It's not a stock I'd want to buy at this point, but it's one I could continue to hold if I'd been in it for a while and had been making me money. If I was if I was a late comer, if I'd got in at higher levels, it was breaking higher. It's one of those ones I'd be now saying, look, it's probably how far has it come back? Yeah, look, if I was buying that late breakout in September where it consolidated, broke higher, I'd be saying, look, this isn't working. I just need to cut this one. I don't want to continue holding and getting out 30% lower. So I'd be more inclined to think about exiting if I was a late comer. But yeah, as I say, I could give it a bit longer, a bit more room, probably more. Putting it more accurately, I could give it a bit more room if I was in profit and I'd been holding it for a while.
Okay, fantastic. G'day, Astro. Let's have a look at PPS.
Trend is up here. It's having a pullback, but that's all part of it. The moving averages are rising, prices above the averages. It's not dissimilar to what we've seen previously. We get the strong rally, pull back to the average, strong rally, pull back to the average, strong rally, pull back to the average. The key now, we want to see it stabilise, probably pretty close to current levels. Don't want to see it continue to give back all of these gains. So we've had this strong rally off the 50-day moving average in October. Don't want to see it give back all of those gains. That would make that would weaken the structure. We want to see it hold most of the gains. So probably getting a starting to stabilise around current levels, just above the 50-day moving average. If it can stabilise, maybe track sideways for a few weeks. Maybe we get that platform for another leg higher. So I probably wouldn't buy it just yet. I'd want to see it stabilise first. But if I'm holding it from lower levels, yeah, absolutely, I'd be hanging in there for now.
Okay, fantastic. G'day, Neville. Thanks for the compliments, guys, as well. BBN, please. Let's have a look at him. Seems to be consolidating along Average, is it a buy or wait for a break?
I think it's just a wait at the moment. It's certainly a hold, if particularly if in from these lower levels. It had a big run. It's come back to the averages. It's now how's it going to consolidate? Is it going to just be able to like I think this is probably a fairly important point. The October low. Ideally, it can hold that October low, consolidate around the moving averages, build a platform, and then from there, maybe it can lift off again. I think in terms of an entry, I'd probably like to just see it consolidate for a bit, and some sort of a range develops maybe where we can get a breakout from. It always, of course, it could always just take off again, but more often than not, we find that stocks do pause and consolidate and then lift again. Overall, I like the structure. It looks like we've got this big basing period down here over a couple of years. That's the initial breakout. We've got so you can say just roughly there's the range. We've got the breakout. We've got the return move to the moving averages and the breakout point thereabouts. Some sideways consolidation, maybe then a break higher, could be another entry point. But I think a nice hold if already in.
Okay, fantastic. Hi, Albert. Let's have a look at SYL.
It's got the makings of a trend. I like it's lost its downward momentum, flipped to the upside of the moving averages. It's come back, consolidated on the averages, rallied again. The averages have crossed. All these little consolidations look like the dips are being bought. So I think that I'd call this an emerging trend. Is there some more consolidation coming? Like just looking at price action today, it opened, traded up. Now it's come back. Maybe there's some more consolidation. Like if I was in it, if I bought early on, I'm riding it. I'm staying with it. I've got my wide trailing stop back below the 100-day moving average. If I'm watching it, just given today's price action where it's opened, it's traded higher. Now it's on its lows. I'd say, look, I can just watch this for a few days now. Maybe we get some price action like such, where it just goes sideways, within this kind of range, and then I can say, look, if it breaks above the high from today, maybe that could be my buying trigger. Maybe that could happen in a week or two. That could be a buy. So I'd be looking to buy a break probably above today's high, especially if we get some sideways price action over the next few days or maybe a couple of weeks. It'd be an interesting one to keep an eye on. I think there's certainly some potential there.
Okay, nice one. Hi, Philip. Let's have a look at CQG, please.
Just double check that code, Rog.
CQG. I'll have a look again. Otherwise, Philip, if you want to just confirm down the bottom. Let's go to Kirby's. G'day, Kirby. GHY.
It's a touch early for me, but I can see the potential for something. It does seem like maybe there's a base which is formed. So we had this downward trending period, then the downward momentum, losses downward momentum really starting to trade sideways. Tried to break lower again in September, broke below the June low and got below the March low, but that wasn't sustained. It's quickly snapped back above the moving averages, and we've got this held onto its gains. So we've been buying so that held those gains well off the September low. So there's buying of the dip interest, brief foray back below the moving averages, which was bought a gain. The averages are now close to turning. So I guess now it's I'm probably looking. We're down on today's lows. I'd be looking to see whether we get sort of like that sideways consolidation while the moving averages cross and start to turn higher. If we get that, then the break out of that range, that could be the entry point. So I think there's probably a little bit more price action we need to see, and we mightn't get it. Mightn't be like that textbook sideways price action. We don't always get that. It's just nice when we do, because we can build a trade around it. Our levels for entry and exit become a little bit clearer. So one I'd like to keep an eye on for now, without saying it's a buy just yet. But I think I can certainly see the potential for it to give us a trade. Let's see how it develops over the next maybe the next week or two.
Yeah, thank you. Hi, Shirley. Let's have a look at WTC, please.
Yeah, it's been a stock which has really struggled since the CEO had issues back in earlier in the year. I'd just be leaving this one alone at the moment. I certainly don't want to buy it. If I'd bought it when it looked like maybe it was starting to recover in July, I would have cut that position some time ago. And look, at this point, I'd just be leaving it alone. It's making new lows below declining moving averages. Like, it could base around here. Like, we've got a low there from April. Maybe we get some sort of like a double bottom type of thing, and then we get a larger consolidation, which ultimately moves higher. So, like, could something like that this happen, and then it starts to make its way higher, and we get a bit more of a range. But like, that's just like what we spoke about at the beginning of the show. It's like trying to pick the low. I don't want to try and pick the low. I can see how a low could form there, but I'm not. If it does, I wouldn't be buying until things are back at a higher price above the moving averages. So whilst I could see how a low could form, it's not a trade which I want to try and take. I think looking for setups below declining moving averages, it's just asking for trouble. Yeah, you probably get some right here and there, but you probably get more wrong, and the ones you get wrong probably cost you quite a bit of money. So I'd be leaving WiseTech alone for now.
Okay, thank you. Hi, Devender. Let's have a look at TLS.
Yeah, it's where is it today? Yeah, so look, it's it looks like it's rallying off the moving averages. Looks like it's breaking out of this trading range it's been in for the last month or two. Upward trend continues. It's a motion trader stock. It has been for a while. We've spoken about this before. You can see where we've got the resistance marked in from a while ago. We got a break higher back in February, and it's been a nice trending stock since. Just with that 2 month consolidation or so just recently. I'd be letting profits run. Like, you could probably even consider buying it at current levels. I think buying it at current levels, like if this breakout sticks, we probably wouldn't expect to see it back below the low from a couple of weeks ago. So it could probably be bought. Like, someone wants to be a bit more aggressive on a 6% stop loss. Really, it shouldn't, like, from this low from November. If this breakout in the last few days is for real, it shouldn't come back and trade below the November low. So that's why I say maybe it could be bought at current levels with a close stop, and see whether it continues to trend. Look, definitely one I'd be holding if I was on board.
Okay, fantastic. Yep, shout out to Movember Men's Health, obviously, and this is why I've got the Mo for November. So, yep, let's look after each other, men and women, obviously, as well, around mental health, obviously, and also cancer, testicular cancers for men's health. So, shout out to that. But thank you, Simon, for bringing that up. MEI for Roberto, please, Jace.
Yeah, look, this emerging trend is still in play. It's had a sharpish pullback, and but this is what we're seeing in some of these mining orientated stocks generally. Yeah, I'd particularly if I'm in from lower levels, like the first breakouts in this stock really for me would have been back in June, and then July, and then another breakout in October. So if I bought in this vicinity down here, down around 14 cents or so, sure, I'd be staying in there. I'd have my stop loss. I'd be giving it plenty of room. Maybe my stop could be down around 12 cents or so. So I'd let's just say we bought at 16 cents. I'd be prepared to watch a modest profit turn into a small loss to try and stay on board, and because I think the potential's there for it to stabilise and to rally again. So I'd want to give it that chance. But the only way to do that is to give it room to move around. These particularly these smaller stocks, they're prone to volatility. You just got to give them that room. If you want to use close stops, it's going to be so hard to stay on any trends of great note. So I'd be staying in for now. Probably don't want to buy it at this point. Let's see if it can stabilise first and then start to push higher. That would then maybe be an entry point. But yeah, look, if I'm in at good levels, in from lower levels, I'm happy to let this one run. And if we give back, if I was in it and I had that initial run and then I gave it all back, well, look, that's just how it's going to go. Sometimes that will happen, but that's the price we pay to potentially stay on large trends. We've got to give stocks like this lots of room to move around. And for now, I think it'd be a hold. But knowing where the exit point is, I don't want to be holding onto a stock like this all the way back down at 6 cents if it were to come off the rails. Not suggesting that's going to happen, but that's why I want to have an exit point. So if things do go wrong, I don't hold it all the way down.
Okay, fantastic. Hi, Yuki. Let's have a look at CSL, please.
Yeah, continues to be in a void, and spoke about this a few times. Once this decisively broke lower in August, it was an exit and an avoid, and that remains the case. It's like it's broken down from this large range and been in for about 5 years, I think. So yeah, it's like it's not a stock. It's like WTC we just looked at. If we want to try and pick a low, like we could have tried to pick a low in September, and where did that get us? It's making a new low now. So I think the odds favour new lows when stocks are declining below moving averages. It's just the path of least resistance. At some point, it probably makes a final low, and maybe it's going to be a great buy at that stage. But who knows when or where that's going to be? It could be 18 months from now at lower levels. We don't know. So it's just like I think there's so many other opportunities in the market. Why get hung up on a stock which is moving in the wrong direction? It's like maybe this would be a great trade again one day, but let's wait until it's giving us something. Let's wait until it's like at least above moving averages, which are turning higher. At the moment, we're fighting an outgoing tide.
Okay. All right. Fantastic. Hi, Evangeline. We've looked at Telstra. Let's have a look at SS1, please.
Yeah, extreme volatility in these some of these smaller silver plays. It's like, well, we want to give stocks room to move. Like that's a lot. That's 48%. I don't know whether that would have been. Let me put on an ATR stop. Just see where that comes in. It's so wide because the trading ranges are so wide. Yeah, and that's yeah. Look, if I had this, I'd continue holding it based on that. If I'd bought this, say we'd bought this breakout, there was a nice trading range and a breakout back in July, for instance. It's yeah. Look, I'd be in there still, and I'd have my stop at around about 62 or wherever the trailing stop calculation comes in, and just give it all that room to move. And that's how you potentially stay on volatile trends in some of these smaller stocks, but the risk is higher as well. So it's like, yeah, you as one part of a larger portfolio, I can manage a fair bit of volatility in one stock, but I don't want my whole portfolio built up of stocks like this. And some people do that, and it's great when the market's moving in their direction, but it becomes it's such a stressful situation when a lot of the portfolio is coming back heavily. So yeah, just always think about risk. Don't just think about upside. Think about risk. And it's great when these smaller stocks are going our way, but the only way to withstand wide enough trailing stops to see off this sort of volatility is to keep the position size reasonably small. So and not have every stock in your portfolio having a similar profile, or you just mentally won't be able to cope, most likely. So look, for now, I'd be staying with it, but I wouldn't be buying it at this point. It's we don't have a clean setup, and it's a volatile trend. It is higher highs and higher lows, but with such great volatility, I'd just be, yeah, it's a small position stock at this point.
Okay. Hi, Chris. Let's have a look at EVN.
Yeah, well, this has been doing quite well in the rebound. So I've got a core holding in this, which I've had for a very long time, which I'm not touching, and I have a tactical position which I bought just as prices were breaking higher in August. You can see prices were below the averages, got back above, had this shallow consolidation. I bought that breakout, talked about that on my Friday strategy session, and I sold that position couple of weeks ago, just when we got that sharp move back. So that wasn't a trailing stop exit. That was just I bought a breakout, and it was just meant to be for as long as gold continued to push higher. Then I could just pull back that risk. So I've got a good sized core position, and it wasn't like just trimming the sales a bit. So I got rid of that. Got rid of my tactical evolution there, but my core evolution, yeah. Look, I'm happy to keep holding. If like we went through that scenario in gold earlier on, and we talked about the potential for a rebound. We're seeing the rebound, and we're seeing the accompanying rebound in the gold stocks. It's what happens from here. It's like I won't be surprised if this we're getting a rebound, but we do find that it comes back more within a range for several months. Like this is it's close to a vertical rise there. Like it's just not going to keep going up vertically like that. I wouldn't expect so anyway. So it's not a stock I want to buy at the moment, but it's a stock I'm happy to hold medium to longer term. I won't be surprised if we see some consolidation if we get a bit more of a rally in gold, but the gold stocks just maybe need some more time before they can run again. Don't get me wrong with any of this. I think there's a great bullish story on gold. I'm bullish on gold. I'm long gold, but it's not. I'm bullish every month on gold, and gold's just going to rise every month in, month out. There's going to be multi-month pauses and consolidations along the way where prices come back. I think we may be around one of those points now.
Okay. Thank you, Steve. Let's have a look at PDN, please.
Yeah, it's talked a lot about this on Friday as well. Look, uranium looks like maybe it's it's certainly got the potential to be starting to build a new emerging trend. It's I think there could be some more time involved, and the local uranium stocks haven't run like the North American uranium stocks. They've had quite good upward moves since the uranium's low a couple of months ago. Uh, I've got some Paladin. I'm wondering whether this is what we're seeing now is the start of a bit of a range that could continue to form. I wouldn't be hurrying to buy any of the uranium stocks at the moment. I think we just need to see whether they can stabilise around this moving average. If they can, that's great. That might set up the platform for another run. But we're just in um, that phase where we don't have a strong upward trend, and we've got signs of an emerging trend, but is it going to develop? And it's I think if we can see a break above these recent highs in the next few weeks, well, that would be a great sign for Paladin. But I think the key will be, can it hold? Can it hold around these moving averages? If we see it breaking back down through $7, well, it really starts to weaken the structure. For now, I think it's a worthy hold. I'm holding it at the moment, but if it were to break through 7, I'd probably reassess that in terms of buying some more breaks above the recent highs. So it's really a range bound situation. Are we going to see some more price action within this sort of band? And a break either way could give us could tilt the odds for the next trending phase.
Okay, fantastic. Hi, Laurie. We'll talk about your general question at the end of the show if we have some time, but let's just continue on with our tickers. We've still got a few, so let's do PRU, please.
Yeah, look, same as I was saying with Evolution. It's bounced back nicely off its 50-day moving averages, up near its highs. It's be a motion trader stock. Like if I was holding this in my motion trader portfolio of stocks, I'd continue holding it. It's trending higher. So don't try not to get confused with what I was saying earlier with gold and the potential for a consolidation. That doesn't mean I'm saying I think everyone should go out and sell their gold stocks. That's not what I'm saying at all. There's plenty of gold I'm holding, and I don't intend to sell. I've just trimmed my sales a little bit, and I just used a couple of trades which weren't in my motion trader portfolio, though on my discretionary portfolio, which I just bought for just because gold was breaking. It was like, okay, let's buy these, see where they go, and then I just square them up. But like if I had this, I was holding PRU in my motion trader portfolio. Yeah, I'd be letting it run, wide trailing stop, see where it goes, and I'm not in a hurry to buy it at this point for the reasons I've been through already. But it's trending higher, and that's really all that would matter from that perspective from me. Wide trailing stop, see how long it, see where it goes.
Okay, good one. G'day, Wish. Let's have a look at C79.
Yeah, trends up, rising moving averages. If I had it, I'd be holding it. Probably not buying it at this point. It's had a good run. Maybe on the next consolidation we could look at it. But yeah, this is just one of those stocks I'd be happy holding with that wide trailing stop below the 100-day moving average.
Okay, very good. We're going to go back to Phillips, who was the mistaken one. That's GQG. GQG.
No, it's like we've got those declining moving averages, like we are talking about with CSL and WTC. There was a great trending phase, but that's not the case now. That's why I always talk about have that exit plan in mind, so that we don't get stuck in this position of being in a declining stock and then not knowing what to do. It's certainly not a buy. It's like if you go try and pick the low, like any of these points could have been the low, but they led to lower lows. So, why is now any different? Why will this be the low and we don't see lower lows? And I don't think there's any particular reason. So I'd leave it alone. It's not a stock I'd have in my portfolio. And before I buy it, it's got to get back above those moving averages. You just never know. Just like we don't know how far a trend can last on the upside, you don't know how far it can go on the downside. What seems inconceivable can become the reality. It's like, not saying this stock's going to continue deteriorating, but it could. And I don't want to be in that could situation, so I wouldn't be there.
All right, thank you. Hi, Shumita. Let's have a look at ELV, please.
Yeah. Look, it's trying to get, like, it's the same with some of the other lithium stocks. There's this look of an emerging trend, but will it emerge? Will it develop? And we don't know. But I think it's worth, for anyone who is happier with this more speculative early situation. It's like there's some potential with it. We've got rising lows. Price today is up near its high today. Like, possibly, it's not a clean range which is breaking out of, so that's why I hesitate. But maybe it could be bought at current levels with probably still needs like a 25% stop. And it's like, look, it's not a stock I'd buy. The setup's not clear enough. Like, is this the rally off the moving averages which continues to really gain acceleration, or is it going to then come back and do more work within a broader range? I don't know. If I had some, bought in recently, sure. Let's see where it goes. We can have a stop back down, below the 100-day moving average. But I'd probably be waiting. If I really liked it and I wanted to get some, look, we could get it here, put a 25% stop on it, but we don't have a clear level that's really breaking out from at the moment. But like some of the other lithium stocks, they tend to, like lithium stocks generally, they tend to move as a pack. So if there's this broad move in lithium stocks, well, ELV, there's a good chance it gets swept up as well.
All right, good. Brijesh, hello. Let's have a look at CTT.
Lengthy period where we didn't want to know about it. It's back above the averages. I think we've looked at this before, and I think I may have said, let's see what the consolidation looks like. Well, it's still consolidating. It's now back at the moving averages. I wouldn't be rushing to buy it at this point because it's not really is this? It's not like it's trading sideways along its moving averages. It continues to lose ground. It needs to get a foothold. It needs to have a decent rally and then hold those gains with a shallow consolidation, then start to break higher again before I'd want to buy this. The moving averages have crossed, but since crossing, it hasn't been able to break to a new high. So I'd leave it alone at the moment. It may be something we'll set up here, but the risk is that it just continues to lose altitude. So I'm not rushing in to buy it. But that said, if it is able to then quickly put on some steam and hold those gains, well, then we could get a situation where it becomes a quick rally, then some sideways price action, hold on to the gains, and then a secondary break, and then maybe it does become something which could be considered. But look, I don't think we're quite there yet.
Okay, thank you. Hi, Blue. Thank you very much for the praise. Let's have a look at ALK. Sorry, ALK, because they have what it takes to get to its all-time highs again.
Yeah, I've got some of this myself. Look, it's doing okay. We've got a it's at this point, it's like it's this sideways type consolidation. Back to the 100-day moving average rallied off the average. It's look, I'm happy to continue holding it. Wide trailing stop. I'm using the motion trader stop, wherever that may be at the moment. But I do like this rally we're getting off the 100-day moving average. Whether it's heading up to new highs now or like it's involved with, I'm pretty sure it's involved with gold. So if that's the case, we could well find that it continues to be range bound for some time. But I'm happy to stay with it and see where it goes.
Fantastic. G'day, Elisa. Saying thank you for a signal that you had on the 15th of the 10th, Jace. VMM, please.
VNM.
M for Mary, 2 M's.
Let's have a look. I don't remember this stock. The 15th of the 10th up near the highs. Look, I don't remember the circumstances around this, but this had become stretched above those moving averages, and now we've got that pullback to the averages. The trend still remains an upward trend in place here, but we've got this, and this is what we've seen with a lot of these mining stocks. We've had this sharp ascent, and it's been followed by a quick pullback to around the averages. At this point, like if I had this stock, I'd continue holding it. Well, it depends where I got in from. If I bought it on the 15th of the 10th, which I'd need to look into that. If I bought it then, well, then it'd probably be getting pretty close to being an exit. That wouldn't be. It's like an exit. Yeah, it's. If I'm in from lower levels when there was an early breakout, great. I'd still be holding with a wide trailing stop. If I bought it a whole lot later, it's probably one I'd be having to look at exiting. It has come back quite a bit. So look, again, with these smaller, more volatile mining stocks, it's spreading risk widely across a number of stocks and not having too many in the one category. So we help avoid these sharp declines when they happen. So there's still a trend in place, but depending on where you got in, it's a hold from good levels, giving it still a bit of room to move, but probably not one I'd want to be buying at this point. I need to see it stabilise and start to lift off the averages again.
Okay, thank you. I mean, I can't confirm if that's one of your signals, Jace. Just says bought on a signal 15th to 10th. But let's have a look at WR1, please.
Yeah, maybe there's something setting up here. Look, it's really just been trading sideways around those averages. It's like we don't have a breakout as yet. Averages are just crossing, but I do like that. It had this lengthy decline phase, and now we've just got a period of stability. So is this setting up for a turnaround? It could be. It's one of these lower price stocks. They don't. Sometimes you get these sideways periods which last for months or years, but I think if we could, maybe if it can break above the October high, which is pretty close, maybe there's a trade there, and then you're probably looking there's so much risk with these stocks as well. Probably then need 30% to play it. It's probably not one for me, just because the volatility is just too high. It's hard to manage the risk, but we can say there's a sideways period of price action. Prices do seem breaking from that. If you're comfortable with a 30% stop, well, yeah, maybe so. There's certainly enough structure to say a trend could develop from this. but it's just like 30% of risk. It's you've got to have good upside. And yeah, look, it's a sort of stock which could double, but nonetheless, it's a lot of, you've got to give it plenty of room. Otherwise, you just give it 10%. It's like within a couple of days ranges. So it's a harder one to play.
Okay. G'day, Shannon. Let's have a look at KO, which is Coca-Cola.
I'll be that one. Yeah, well, this remains in an uptrend. Uptrend, it's consolidating. If I had it, I'd be holding it, continue holding it. It doesn't. It's not a standout buy at this point. It's not really trending. There's no immediate momentum with it. I do like that it's come from below the averages to above, and now it's sitting on the averages. So maybe we could like chop around on the averages and start to move higher again. So hence, I'd be happy holding it. But there's nothing suggesting that I should be running in and buying it today. I don't think. Yeah, look, there's a broad upward trend, but no immediate momentum. So it's one, I think, yeah, as I say, to hang on to, but probably not a rush for buying.
Okay. Hi, Charlie. Let's have a look at 4DX.
Yeah, it's starting to find some support down here around its low from September, back around the moving averages. Yeah, this is one of those ones where if bought at good levels, I'd be staying in it, giving it lots of room. But I'd have a stop below the 100-day moving average, so giving it heaps of room to move about. Yeah, look, so far yes, it's come back, but it's just it's come back in a proportional way to the previous rally, which I think is important. So it is holding on to a large portion of these gains. So not one I'd be hurrying to buy, but one I'd be happy holding if in down here at the where prices were initially breaking higher.
Okay,
And
thank you.
it's one of those ones which could take a while. Like from a 21-cent stock to at as high a $2.50 stock, it's tenfold. Yeah, you never know with some of these stocks. Maybe it can continue on into a much larger trend, or maybe this is it. We just don't know. So I've spoken in the past about like how I like to, if I get an exceptional gain in a stock, maybe scale out of it a little bit, just in case it's up and then it makes its way all the way back down. I don't know whether that will happen or not here, of course. Could it turn into a much larger trend? Well, of course it could. But yeah, not one I'd want to be buying at this point.
Okay, we'll go to two more here. Hi, Betty. VTX, please.
BTX.
No, VTX. V for Valerie.
VTX. Yeah, another one of these mining stocks where it gone up quickly and then come down quickly. Yeah, look, this isn't one which I don't like. This given it's nice. There's a nice rally through September, but then it's given back all those gains. Where was the buying at the dip? Never happened. It was the rally was sold all the way back down. So there's no immediate trend with this stock. I think at best it's a range bound stock at this point with a false break. Had the classic zigzag correction, started to rally, broke higher, and then gave it all the way back. I'd not one I'd want to be buying at this point. If I had it, it's like, where did I buy it? Did I buy it as it was breaking higher? In which case, I'd be out. Would have hit a stop loss. Did I buy it back down here in September 24 when it first got above its moving averages? I think a wide trailing stop would have even been hit. So it's hard to see a scenario where I'd still be holding this stock. It's a harder one. Sometimes we get nice clear cut trends, and other times we get stocks which are just messier, and it's harder to see the structure, and they're just more difficult all around. I think this is one of them at the moment. We don't have a clear trend, and it's a low price stock, which they often create volatility without ultimately going too far. So yeah, until we get a clearer structure, it's probably just one I'd be avoiding for the moment.
Okay. And final one from Caroline. Let's have a look at CAT. I've applied for a share purchase plan at $6.68. The price has dropped noticeably.
Yeah. So I've got some of this myself, and the trend is still up. So we've still got the moving average have started to turn lower. Prices dip below, but look, we've seen this before with the moving averages start to roll and the price dips lower. That's and also down here. So that's not a deal breaker for the stock. The key for me is where's the trailing stop, and using that. So that's what I'm using. I'm using the wide trailing stop, and I'll stay in whilst that's intact. Yeah, what I want to watch, I want to see what happens now we're below these moving averages. If we get a bit more weakness and then price can't really bounce, and we get that'd be a warning that maybe there's more downside coming, and that would be like then you get the breakdown and prices start to trend lower. That's a possibility. That's something I'd be aware of, a risk I'd be aware of, but that only really starts to come into play if prices can't rebound. If prices can quickly get back above the moving averages, that neutralises that risk. The risk really does form if prices maybe dip a little bit lower and then can't rebound, get stuck below the moving averages. That's what sets up a vulnerability in the price structure. But for now, I think for me it's a hold. Certainly not a buy. It's one to keep an eye on. With share purchase plans, it's the way I approach them. I'll look at what the offer price is, and I'll look at the current price, and I'll look at the closing date. And I typically make a decision pretty close to the closing date. And if I've got a good margin, if the share purchase plan is just say it's at $6 and the price is trading at $7, and it closes in a couple of days, I say, look, I've got a good margin there. I'll take my holding at $6. If the share price is below the offer price, well, I'm not going to take up the offer because I can buy them cheaper on the market. If there's not much of a margin, if it's a pretty close thing, I'll tend to probably go, yeah, maybe not. It's like some share purchase plans can work really well. Others you can get, Look, something to think about. The risk with waiting for closer to the expiry date is, or the closing date, is that sometimes they close early and you miss out. That's happened to me in the past too. But I'd prefer to buy late so I can see where the share price is relative to the offer price, and then make a decision about, do I have enough margin to make this something I want to do. So there we go with CAT.
Okay, fantastic. Thanks, Jace. I think patience is always the key with anything. I think you've just given us another example there of where patience could work out, right? Or might not work out, but yeah, it could also work out there. Let's finish off on this general question. We've done with the tickers for today, and it's just around setting stop losses. Is it better to set a limit or market than limit? What's the difference?
It depends on the stock. It's like if you're talking about BHP, you probably find at market because it's a big liquid stock. If you're talking about a stock with a smaller stock with lower levels of liquidity, if you do at market, by the time you get filled, you might move the share price 20% just simply because there's not enough bids there. So just if you go at market, the broker selling will go, okay, it's been triggered, so let's sell. Like, where are the bids? And if there are not many bids, well, you might get filled at much lower levels. So in which case, you kind of maybe you're then looking at using a limit, not market. Any which way you do it, I think you got to be. It's I don't think a stop loss like entered into your broker. I don't think it's set and forget. I think you still got to monitor it and manage it. You set a limit and it opens below the limit, then you don't sell, and the share price continues to fall, and you think, oh well, I'm sorted. I've just got a stop loss there, but you've set a limit, so you got to monitor it, and yeah, you got to be still got to be part of the process. It's not completely automated. If and whether you use market or limit, it may differ with each stock. So there's not a single answer to that question, Rog. It depends on the situation.
Yeah, I totally agree with the fact that stop losses are not set and forget. I've had a few cases of clients thinking that. Unfortunately, it does help with the process. But as you say, if you set a limit at $5 and it opens up at $4.50, it's jumped that price. So while it might have triggered, you may have put in a limit of $4.75, selling no less than $4.75, but it's nowhere near trading that price. So you've set and forget it, and you've thought you've sold out, but you're not, because it's not trading in that price, right? So it's certainly not nothing's ever 100% in the physical share trading realm world as well, right? So people might be comparing to other products out there. We're obviously talking stocks where you're always trading buyers and sellers, right? So
Yeah. So here's an example. Here, say you buy some of this stock here. It's MSB. I've just scrolled through to find a point where I can use an example. Let's just say we bought some at $1.60, and say, okay, look, I'm going to put a stop with a limit at my trigger's $1.52, and my limit is I'm not going to sell them for a cent under $1.49. So here we go, and you go off on holidays and go, okay, I'm not even looking at the market because I'm taking a month off and everything's sorted out. The company comes out with something which surprises the market. Stock falls. There's your trigger. There's your limit. Doesn't trade in that area. Opens below it. Falls, rebounds, still doesn't get to your limit. So your broker's not going to sell your shares. You still own them, and you're off on holidays, and you're not looking at it because you think you're covered, and you don't look at it again for a couple of months, and you come back, and it's like, you look at the price and go, well, look, that's okay, I'm out. But yeah, you're not out. You got to monitor and manage the situation. Nothing set and forget, or you can get an unpleasant surprise at the end of it all.
yeah, exactly. Good example, good visual example there. I think that will do for today, Jace. I think some great tickers in there, some great examples of not so great ones that we're looking at right now, and some good wisdom there. If you want, just go over to hear a bit about Jason's story around the 17-minute mark of today. So, all right, thank you all for your attendance, and once again, we do really, really appreciate you coming along. As Jason's mentioned a couple times, he goes in depth in a lot of his a lot more of his strategies and some of his plays, especially on gold and silver on his Friday session. So go in and sign up to that down below at motiontrade.com.au. There's some links there. You've obviously, if you're not a client of Selfwealth, you can sign up down the bottom there for 10 free trades as well. And then, of course, always like and subscribe, and send us a comment on what you think of my mustache for Movember. I know Jace said he's not going to grow one because he's still waiting for 50, 60 years. Or you started growing one, Jace. Is that what it looks like?
No, you're the king of the mo.
King of the Mo. All right, I'll just continue being the exactly, the king of the Mo, and you can be the king of the stocks, right? So, okay, everyone, thank you very much, and we shall see you again next week for another show on technical analysis and Selfwealth Live. Thanks, Jace.
Thanks, Rog. Thanks, viewers. Thanks for joining us, and we'll see you next week.
All right, take care. Bye-bye.